While oil recovered some ground today, U.S. crude futures closed up 2.8%, hitting their highest settle of the year. Brent crude for June delivery gained more than 3%. Now, there are some concerns over the Middle East oil supplies as Saudi Arabia and allies intensify their bombing of Yemen, targeting Houthi strongholds. There's a crucial strait on Yemen's southern coast, which controls access to the Suez Canal, the Red Sea, and ports of western Saudi Arabia. And investors are also betting that U.S. crude output will be further reduced. Now, while oil has been trending up today, it is significantly down over the past year. WTI crude, a West Texas Intermediate, which is used as the benchmark, has lost over 40%, and the drastic drop in oil prices has impacted the global economic landscape. The Conference Board has published a report examining this and looking at the effects of the moves in oil prices over the next 6 months. And I spoke with Bart van Ark. He's the Conference Board's chief economist and a co-author of the report titled Getting a Handle on Energy, Global Growth Scenarios in Times of Changing Oil Prices. I asked Bart why the report says the positive impacts of oil's downward trajectory have already largely played out.
Basically, since the end of January, we haven't seen the prices go down much further. It's been pretty volatile between roughly, $45 and $60. And once we're at that point, the consumer isn't going to get a lot more benefit from it. And that's why we're seeing the prices at the pump at the moment even go up a little.
But still, you say that the consumers did benefit the most from the way this whole oil thing played out, but yet they haven't spent everything that they've benefited.
Yeah, that's very interesting. We actually surveyed the consumers and we asked the consumers how much of that windfall that you got from that price fall did you actually spend. We surveyed them in the US, in Germany and the UK, and pretty much everywhere they said, well, about 25%, maybe a little more. The rest of it they were saving, but a lot of it they basically just kept in their pocket on their checking accounts, just waiting for the prices to go and rise again, and a little bit frugal in terms of their spending.
On a macroeconomic level, the decline of oil prices has really been dramatic to the global landscape. In your report, you looked at how it impacted the GDP of net exporters and net importers. Which countries have been the biggest winners and the biggest losers from this plummet in prices?
Well, to start with, the biggest losers, that of course are the producers. And there are two types of producers. There are producers who actually are pretty diversified and therefore have an ability that even though prices go down, they can diversify their economy and go somewhere else. That's true for Norway and for Canada, even for Mexico. But then you've got countries like Russia or Venezuela who are not diversified, who have additional political, geopolitical pressures, and they have been suffering hugely in terms of their GDP contracting by 3 to 4%.
Now, these countries like Venezuela, like Nigeria, are they able to stop producing oil in order to push prices back up, or do they have no option just to keep on pumping, and in effect that hurts them in the long run because it keeps the supply up and the price is low?
Yeah, even though these countries are big producers, in the oil space they're just still too small. I mean, the biggest producers are of course Saudi Arabia and a few other Middle East economies, and then of course the United States has come in as a very, very big producer. So they are definitely not price makers
Now,
here.
you mentioned the United States, and the big boom in the US has been shale oil. How has all of this impacted the shale oil producers?
Well, this, of course, has been a very interesting development. The shale oil producers basically have only enjoyed a boom so far until the prices came down. So once the prices came down, everybody was wondering at which time are they going to get a really hard time. And it turned out that, when the prices dropped below $60, something really needed to happen. So what we saw happening is that indeed you see a huge drop in the number of rigs. About 1/3 of the rigs have now been put out of production. But production levels itself have continued to stay high and even go up a little. So what happened here is that shale oil producers basically made huge cost savings. They actually made new investments into more productive rigs. So production levels stay very high.
So they haven't been driven out of business?
No, I mean, they made adjustments. So they took out of business the more unproductive wells, but they basically as a whole in business.
A big theory was that Saudi Arabia is keeping prices low and maintaining the output in order to disincentivize the shale oil producers and drive them out of the game.
Yeah, and that's the game that's still being played, and that is one of the reasons why Saudi Arabia is not a swing producer, because they can hold out quite long, but so far it looks like the shale oil producers in the US are not budging.
Okay, they're not budging. What about the players in the renewable energy game? Because oil prices are down, that makes renewable energy even more expensive.
Yeah.
How does it play out for them?
Well, first of all, we should not forget that renewable energy is, in most parts of the world, still subsidized. So, and most countries have an interest, because of the need for CO2 reductions, to actually keep active in renewable energy. So the subsidies are still there. The consumer has an interest in renewable energy if they can. So even though renewable energy, particularly new projects, are suffering, I do think that renewable energy will remain a very important competitive source of energy.
Bart, the bottom line of your report is expect more volatility.
Yes.
Quantify that. What does that mean? What does that mean in terms of prices in the next 6 months?
Well, in the next 6 months, I mean, we're now sort of roughly at a $55 to $60 range, and sometimes it goes up or down. Obviously, if prices would really go back up to $75, we would see some negative impact. I mean, the US would then probably suffer about 0.2 percentage points of its GDP growth. It's not nothing, but it's not huge. Of course, the producers, they would actually benefit from that. But then if the prices would go down further, that will give us just a little bit more benefit in the United States, but not a lot, maybe 0.1% of GDP. It's really, what is the real issue here is not so much where does the price go, but how volatile is it going to be? Because neither consumers nor big users of energy like volatility.
Well, you have 3 pricing scenarios in your report. As you mentioned, you've got the Back to the Future, which is above $75. Then you've got the stabilization scenario at around $55, and then you've got the drop below 40.
Yeah.
Who's going to be impacted the most should either one of those scenarios come into play?
Well, if we go back to the recovery scenario, so we go back to sort of $100, we're basically on a long-term, the really long-term trend, where there will still be a lot of demand for energy. We have still large increasing middle classes in China and in India. And that trend, of course, will be very good for the energy industry, because whether it's renewables or oil or coal or nuclear, they will all be adding to production. So that's a very good scenario for the producers. Prices can go down to $40 because or even below that, because if everybody stays in the game, Saudi Arabia is willing to go down to $20 a barrel, then it's going to be a really tough place. But mind you, the consumer is not going to benefit then either, because if prices go down if prices go down so much, it is also a sign of the fact that the global economy is actually pretty weak. So the consumer isn't really benefiting from this. You can't get to $40 decline in prices.
So below 40, everybody hurts.
Below 40, I think everybody's going to hurt.
What about Iran? Because the International Energy Agency says that if sanctions are lifted, if negotiations with Iran are successful, if Iran gets back into the oil game, that prices could drop by an additional $15. How much of a game changer is Iran to this equation?
Oh, it's a very important one, but it's just one of them. But it's certainly one that's in the scenarios and that is now playing out. And yeah, if Iran comes back on production, it is one of the bigger producers in the Middle East. So that will definitely drive us down. There's still a big likelihood, though, that we will remain in this sort of, $50, $60 scenario we're in right now. The only thing that we're saying in this report is just don't bet on it, because there's just so many uncertainties that don't think that everything will be as it is today.
Okay, don't bet on it. So $50 per barrel is not the new normal.
Oh, totally not.
What can make this go back to $80?
Oh, what will make it go back to $80, most importantly, is that we do see a sorting out of the less productive producers in the oil sector and the more productive producers. So you would have to see unproductive installations in countries, various Middle East countries and Africa and Russia go out of business. You would have to see very productive investments in the United States in shale oil. And again, you need to see an overall faster growth in the global economy for the consumer to really be a customer of more oil.
All right.